All right, welcome back into Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Thank you very much for pulling up a chair and joining us, if that's what you're doing. If you've been with us all day, well, you deserve a big old gold ribbon, blue ribbon, whatever it is, because it's been a tough one as far as prices go. Let's jump in and just tackle them right now. What's corn doing? Corn's down by 14 cents, 6.74 and a quarter. Oh boy, that's about what, 5.5 cents off the lows. March is down 14 and a quarter cents to 6.79. 4.25 cents off the lows there. Soybeans, well, they're not much better, and they actually got a little worse. 32.25 cents lower in Nove beans. 14.24 3/4 is last. About 4 cents off the lows, and we've got what, 32.25 cents lower in Jan to 14.31. Moving over to the hard red wheat. No, let's go to wheat in Chicago. Chicago wheat, 32.25 cents lower in that Chicago D-Sweet. 8.78.5 is last. That's a little close to the low, right? That's about a penny and a quarter off the lows, so, or penny and a half. March is off 29 3/4 cents, 8.92 and a quarter, and that is 2.25 cents from the lows there. If we take a look at the hard red wheat in Kansas City, the HRW down in KC, Deese is off 28 3/4 cents to 9.50 3/4, and that's 5 cents off the lows there. March is off 27 3/4 cents to 9.47 3/4. That's about 4.5 cents off the lows there. I guess the good news is we've been a lot lower, right? I guess that's what we're going to take away from this, if I was to really kind of make it a positive thing. But it's a good day for consumers too. But anyway, 26 cents lower in Deese, 9.51 3/4 is last. It's about 5-6 cents off the lows. 24.5 cents lower in March. Spring wheat in Minneapolis, 9.58 even is last. And finally, this one was limit down. Cotton, let's see what it still is. Deese cotton offered 92.54. That's offered limit down. March is offered limit down at 89.67. That brings in our next guest analyst. He's Todd Horowitz from Bubba Trading in Las Vegas, and he has come to make us feel better, cheer us up. Have at it.
I look, markets don't go straight up. They look much better than they did 3 weeks ago, and I think they're going to continue to look better. You know, I think we play far too much emotionally into day-to-day price movement, and I think that's one of the bigger mistakes that everybody makes. It forces you to make a bad decision because you're looking at this very short-term price. You know, in this business, especially in the farming side, there's more delayed gratification than instant gratification, and I think that's the biggest thing we have to understand. That the prices look fine. There's no technical damage being done to these charts if you're a technical trader.
Yeah, and you know, if you go back and look at, see, you know, that corn, I mean, basically we're at 6.75 going into harvest. That's pretty darn good, isn't it, Todd?
I think so, and again, I think there's reasons to believe they're going dramatically higher. You know, there's just so many problems out there that we continue to ignore and avoid. And, you know, overall, you know, oil, I don't like what's going on with oil. Why is oil down $6 all of a sudden? Is there some funny business going on with Saudi Arabia? You know, preparing for the next couple of weeks. You know, who knows? But at the end of the day, oil has no reason to be down at these levels based on usage and based on what's going on and based on what we know. So there's a lot of things that are happening right now, but none are good for the economy, but all should be better for the grains and so on. And I think that's what we're looking for.
Yeah, well, and I got to say that the UK needs to take a little bit of a lesson in how to, you know, manage your economy without stressing out the rest of the world, because they went in a little bit of shock and awe to try to bolster their own growth and their own economy. They got rid, cut taxes the most since 1972, and in doing so, they thought they were going to go big and really bolster the things that they've got going over there. But you know what they did is they made a lot of folks nervous, like and so I think today is more or less a lesson in psychology. Am I wrong there?
No, I think you're 100% right. But I think almost markets themselves should be a lesson in psychology and not trying to overly predict the future, but basically play what's in front of you, which is why, again, when I look at the picture and I see a food shortage coming, when I see, some problems in harvest, when I see what's going on, to me, it says that maybe not today, maybe not tomorrow, but soon prices have to go higher.
All right, that smells like opportunity. That's what that means. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk livestock with Todd Horowitz from Bubba Trading after this. All right, welcome back. It's Market Day Report. And we are reporting on the market, and it's been a tough one. And there's not a lot of good news either in the meats. You'd expect some better news than we have. Let's take a look at live cattle and where that's going in Chicago. That's down about $1 across the board, at least $1.25. October's down 70 cents to 144.15. That's a tick off the lows, folks. But Deese, that's off $1.02 to 148.32. And that's about 5 cents off the lows too. Now about 8 cents off the lows now. It's just across the board between say $1 and $1.25 live cattle are lower. It's also a quiet day too, so can't get too worked up about it. But it's really in reaction to what we've been seeing everywhere else. Here's feeders. They were trying to go higher on the lower corn board, but that didn't work out because there's just so much bad news about, or at least the perception of bad news. 15 cents lower in October, 177.82 is last. 15 cents from the lows. November is off 40 cents to 177.65, and that is 7 cents from the lows as well. Let's take a look then, finally, at lean hogs. Do we have anything different over there? No, actually, this got worse. Deese is off $2.60 to 83.07. We've got Feb off $2.57 to 87.25. All right, let's get back to Todd Horowitz, Bubba Trading. 50 seconds, Todd. What do you think about the livestock?
I think it looks fine, Scott. As I said all along, I don't think there's a lot of room for it to go up, but I don't think we're going lower. I mean, if you look back just a month ago, we're $10 higher than we were then. So, what is to be concerned about? You're playing against the crude oil market. You're playing against the consumer, and the consumer is struggling. But yet prices are maintaining. So I don't see a lot of room to the downside. But of course, I don't see an explosion to the upside either. I think they're going to be steady, which I think at these prices, not bad, depending on what happens with the rest of the inputs as we go forward.
Yeah, it'll be interesting to see. I mean, boy, we still have this economy to worry about. We got a lot of other economies to worry about, and a lot of central banks around the world, raising rates. So appreciate you coming on, Todd. Have a great weekend in Las Vegas. Todd Horowitz, Bubba Trading. He's in Las Vegas. We're in Nashville, and I'm going to throw this one back over to Suzanne.